Okay, so we are starting. I guess I can show my screen. I want to talk about some things today. I hope everybody had a good day trading. I know people are still funneling into the webinar. If they are, that's fine. We'll carry on. What I want to talk about is a bit of, I think people's planning is getting a lot better. So I see people like getting the understanding of how to plan and how to prepare for a trade, but I don't think people are planning the long term. The reason why I say that is because we seem to go in spurts, right? So today was a great day. I think everyone can agree. If you traded today and, if you knew nothing about Forex and you just saw the person sitting beside you in the chat room trading and you followed their trades, chances are you would have been profitable. Whether you knew that USD JPY was going to drop or USD or the gold was going to rise, you pretty much could follow and it went suits. I mean, once again, it helped that Trump was being Trump and causing grief. So that pushes the market and us little bottom feeders get the benefit of it. But I mean, once again, it's planning for that. It's understanding the market. It's understanding a little bit about what's happening. And it's also sort of making judgment calls and also being able to understand why you're doing what you're doing. So what I want to talk about is a little bit about the mental game. The mental game being, like the fear of missing out. I'm not making enough because my account's only $500 and I'm only making $10 or $15 a day. That's not enough for me. What I think a lot of people have to remember when you're trading is you are doing something that you probably enjoy. Okay, so let's break this down. I'm a little bit older than most people. There are some people that are older than me, but what I want to talk about really with the mindset is, like we can sort of talk about stuff like this and we'll say, what are my goals, right? So if I say, what are my goals? I want a Lambo, I want a house, I want a steak. Um, you know, those are great goals to have. And I think everyone should have goals when we're talking about, various items and things like that. But the idea is, you're going to have goals, but then how are we achieving those goals, so to speak? Um, and it's really the mental aspect of, today was a perfect example of, pretty much a perfect trading day. What we saw was, everything went according to plan. There was really no pullbacks. It was this straightforward push, right? So if we go back and we look at our charts, you can look at the daily today on gold, and it was just one big candle. Like it was a big fuck you to the world because it just flew up. We can take a look rather quickly. We started at like yesterday at, at this time at 1237, and we basically barreled up to like 1260. So you have your low of 1236 and your high of 1261. We opened at 1237. So really, you had almost like 100 pip drawdown, and then basically from that point on, it was like uppity, uppity, up. Okay, so the trade was easy, and everyone says, you're profitable and you made money, and everyone was happy. But then, the question arises is like, where did you want to make your money? Where did you find yourself making money, right? Because as you start to dig a little bit, deeper into the shorter time frames, you start to look and you say, okay, well, Ted, when did you make your money? Like, what were you doing? And I'll go back. Let me shut off these things first here. I'll go back and today's the 17th, so I'll look around and sort of I'll use my little drawing tool and let's look at 1400. 1400 is my favorite time of the day because 1400 is 7 a.m. my time, so Eastern time. So this makes me happy because I wake up and I get to start doing stuff. Okay, so I looked around and I poked around and I said, okay, this is interesting, all right, on the 5 minute. This is interesting, all right. So like I got a little bit of a thing going here, right? So we're like, yeah, okay, we bounced back down. And you know, I took a gauge and I looked at that. But I mean, I did talk last night about what I thought was going to happen. Let me see if I can go in here. Oh, those are my awesome pictures. So I did sort of talk about this last night, right? So we talked about some things here. And what I did was, this was yesterday's gold gold daily chart, right? And you can sort of see what I was saying. I said, like, you know, item 8, the future. And I said, you know, this is sort of what I think could possibly happen, right? So then when I go back onto my charts and I go back to the daily, which I should, there we go. If I go back to the daily and then I look at what I've drawn here, you can sort of see, you know, this little piece right here, right? So I was saying, you know, this over here could possibly go up and fill this candle here, right? So I was planning. And this is the thing about psychological aspects of trading, is I was planning, I was, you know, I don't want to say envisioning, but I was mentally preparing myself for it to possibly go to here based on sort of, you know, like this little zone. And then when you look at that zone and you say, okay, well, where was that exactly? You know, you go across and, yeah, you know, we'll go a little bit across and, yeah, 1248, 1250, you know, up in that area. So mentally, I was saying, if I get to that point, I'm pretty much happy, because I don't know that this candle here on the daily is going to fill completely. Who knows, right? Because, you know, you have a trend line here. I was looking at that as well. And, you know, maybe it just taps that trend line and then starts to go back down again. We don't know. I mean, when you look at over here and you see this trend line, right, that's sort of what I was alluding to last night, is more than likely, yeah, we could probably still push further up, right? But I don't know any of that. And I mean, when people look at me and they say, you know, Ted, you were able to call these trades this morning, it's because I'm mentally preparing myself for war. So this is the psychological aspect of trading, is I'm mentally prepared when I wake up this morning and I go back into, you know, when I look at my charts and I go back here and I look and I go into, say, the 5-minute, and we'll go back to, yeah, we go back over here in terms of, like, you know, where we're at, once again at 7 a.m. Because I had already, this is our 7 a.m. area, because I had already visualized yesterday what I was doing today, I was extremely confident, because when I woke up, I had already started to see some things that were going my way. And, you know, you sort of take a look and say, hey, that's great. I want to do stuff. I want to be able to trade. And like I said, I'm looking for specific things, right? So if you go and you say, okay, this is 7 a.m., right? So we'll just, for approximation and for an example, this is 7 a.m., right? And then we look and then we have 8 a.m. over here, right? So 8 a.m. finishes right over around here. So we filled this 5-minute wick, right? So we went down and then we said we were going to fill that wick. But then when we go across, which probably easier if I actually use MT4. If we go across and we say here, like, for the most part, we're at like 1249.53. So when I go back into my drawing over here, and I said, you know, what were we looking at in this range for gold? You know, this little thingy right here, right? You can say this little section here. When we go across, you know, we're probably at that point. And I had looked at this little wick and this little wick as potential, you know, issues with my trading plan today. But what more importantly I saw was, you know, visually, when I go back to today's trade and I look at where I drew sort of this line here, you can see that we were filling that 5-minute wick. There was momentum. So what I mean by momentum, once again, you know, we were moving up. So you look at that as confluence and you say to yourself, okay, I've mentally prepared, I've visualized where I believe the trade is going. So right away now my confidence is a little bit higher, because I looked at something last night and I saw something that, you know, potentially could happen. And now in the morning when I wake up to start my trading day, I'm looking at something and it is happening. So right away, you know, being able to review the charts and look at the charts gives you that added benefit of experience, right? So when you say, what are my goals? Maybe, you want a Lambo, you want a house, you want a steak. Also talk about your trading goals, right? And not trading goals in the sense of how much am I going to make, right? But here, look at it this way. Can I look at a chart and make a subjective decision on which direction we are going? And, not necessarily saying, I know it's going to go right to this level and I'm right, but are we going to continue up? Are we going to continue down? That helps you a lot because, when you're a new trader or even if you're a veteran trader and you're still a little bit unsure of your analysis, that plays with your head because now suddenly you're saying to yourself, well, I want to make 5% a day or I want to make 10% a day, but I don't even know how I'm going to be able to do that. And I think as a trader, you start to realize, as you get more confident with your analysis and your ability to read the charts, now you can start picking out spots and you can say, hey, I can probably get 100 pips from there, or I can get 50 pips from that position. And what that will do is that will allow you to be more confident in your analysis. But then when you're wrong, you'll pretty much know why you were wrong because you looked at a chart, you drew out your support and resistance, you drew out trends, you saw zones, and then you said to yourself, hey, okay, this is where I think it's going. It didn't go that way, but because you picked a side to be on, you were able to say, okay, in this instance here, I thought we were going down because of this. Well, it didn't. It stopped, and then it continued to push up. So I know right away that the overall trend there was momentum with the overall trend. So I can make that judgment call when I look at the charts in this respect. And that's part of setting your goals and also part of the mental game. It's being able to understand like what's happening in the market and why the market is doing what it's doing. Because I mean, at the end of the day, once again, when you come back over here, let me just delete this line here because we've discussed it. When we come back to our daily, a lot of people talk about like they want big pip gains, and a lot of the swing traders like Kevin and Kevin and or Alexi or and Wakir and stuff like that, they do swing trades. And even Dave, they take these positions and they look at this and they're like, holy shit, I can probably fill this candle, right? And this is, your daily. So once again, when you start to look at your daily and you say, hey, can I do this? Am I confident in my analysis? Well, look at that. That's like, that's a huge gain, right? That's a good like 2,000 pips. Even if you said this was your resistance level, you're at 1,600 pips. That's a huge gain. Even on a dollar lot, you're making $1,600 today. But do you have the confidence to hold that trade? Does your plan allow for that? What were you thinking when you took the trade? How comfortable you are trading that specific pair? Like if you look at my chart here and you can sort of see where I've drawn lines and I've drawn my support and resistance just off this chart as an example. It's to guide me. It's to give me information to help what's happening in the actual universe of Forex in itself. So I mean, really giving yourself this information and providing yourself a guide, even if you say, okay, you know what, I want to use this chart and I'm going to open up another one that has more lines on it, just to give myself information. But if you have a basis of like a longer term or a greater longer time frame bias, it does help you see the bigger picture. And that if I drop into the 5-minute chart or even the 15 as an example, right? And I say, okay, I still want to take trades over here. If there's an upward push, I know chances are I'm in the right direction because when I look at the long-term bias today was up, and there's no way for the most part, and I mean, once again, I caveat this with, it's subjective. There's no way that suddenly we're just going to free fall down this way, right? Because I mean, you can look at candles, and for the most part, they've maintained their position. There's no direction where we sort of flew off. And if you have those directions like here and over here, you could probably say, okay, that the 7th of the 7th of May, right? So if we look at what the 7th of May was, the 7th of May was a Sunday, right? So that Sundays and Mondays are always wonky. So when you start to look at candles and you start to see wicks, you probably notice that those days are pretty wonky, and it's probably like a Sunday or a Monday. You can see here, when we went through, here's our Wednesday candle, our Tuesday candle, our Monday candle, our Sunday candle. So you can start to see the Sunday and Monday candles have the most indecision in terms of prices. But that's, once again, there's lack of volume, there's no direction yet, the market hasn't set up, we don't have all the markets open. So that's why I always tell people it's hard to trade those days. You can, I mean, there's no doubt in my mind, I've done it before. But then, I mean, when I look at like Tuesday and Wednesday, I mean, look how much cleaner those candles are, right? So, if you turned around and you struggled Sunday and Monday, you're like, well, I'm shooting myself in the foot, but I want to trade. I look at it and say, well, I started Tuesday and Wednesday, and I pretty much had a banner day. Like I was sort of cruising all the way through. Like I didn't care about Sunday and Monday. I saw people going, oh, the market went down all of a sudden. No, it's going up. Oh, I don't know what's happening. I look at today, I'm like, well, yeah, gold's going to go up and USD JPY is going to drop. So, ride that train, and, you're in it, and the market's in like its freshest situation because you're the middle of the week. Everyone's firing on all cylinders. We've got a direction. So right away, your confidence is higher. So, maybe not trading every day is something that will help build your confidence as well, and also build your mental dexterity, because you're punishing yourself by going into the markets. You're using your own money. You're trying to make money, now you're losing money, and you're saying to yourself, okay, well, I'm going to have to go get a job. Maybe my job sucks. Maybe people aren't paying me enough, and now I'm using like scraps from my paycheck to fund my Forex account. You want to put yourself in the best situation, both mentally and also in preparation, when you actually do your trading. And this is something that I've always talked about, and something I've learned the hard way when I used to gamble, playing cards and poker and stuff like that. I take, whatever I made, and I go play the poker table. I'd be like, okay, I'll play the big game. And when I get blown out, I'm like, oh shit, now I got to wait a week or two to reload. When if I played the smaller game, I would have had multiple buy-ins, buy-ins being, multiple times to enter the game, where I could have played with full stack, played with easier opponents. So really, you have to put yourself in the best situation to win at that point. So there are some questions. How are you, brother? Question. UJ is dropping and there's not a real sign to enter other than the fact that it's free falling. Would you enter upon falling knives, or stay out following your plan and rules to enter and let it fall as it may? So, I mean, this is an interesting question, right? So you have someone here who's seen the action today and decided, hey, I want to try and get in, but how am I going to do that? Now, my question to you is, what is your risk management, and, how are you going to do that? So in this case, when we take a look and we say, okay, let's look at USD JPY and look at the daily, right? So you can see, if we look at the daily, we broke, from what I consider here a little support level. And we're still continuing. But then, I mean, once again, we look left, right? So if you want to take a look, and this is live, you look left, you sort of have this big candle over here, right? So you're saying to yourself, will we fill that? Sure, it's a possibility. I mean, but once again, we did have this huge drop today. Well, yesterday, which today being the Thursday market, which is Wednesday our time still. But you still had that huge drop. Now, how much further are we going to go? I would guess maybe filling this candle potentially. You're going to check your news. You're going to check to see sort of what's happening. Are we going to go into that area? Potentially. But I mean, once again, what is your trading plan going to dictate, and what are you looking for? I can say right now, I would be looking at this this particular situation in the daily and say, okay, maybe we have 3 crows, right? So you have a bear candle, maybe this will finish bear. And maybe, right over here, if you look further left, you have this section over here, which is, a pretty big liquidity zone, right? Because, you saw here we it popped up, and then we blew through it. So, when you sort of, just draw across, potentially we could top that and then punch back up. So it's really how you plan your trading day and say, okay, what's going to make the most sense for me? Momentum's on our side. We'll have to see when the Asian market opens at 8 p.m. where we're going. But I mean, once again, if you're working all day and you're not able to trade, start using your pending orders. Start putting pending orders in, because there's no reason why, if as an example, if you turned around and said, I don't really know where the market was going today, there's no reason why you couldn't put a pending order over here, and as the market goes down, if it pulls all the way through, you put your stops in accordingly, and then like it hits there, and then you've made a trade while you've been working. I think a lot of people, when you enter market orders and you start trying to time the market in that respect, you get nervous because you're looking at things and you're saying, okay, this is where I think the market is going, and then what ends up happening is, as you start to trade, now suddenly the market's going the other way for a second. Now you're starting to get confused because you'd waited all that time to trade, and now you took a market order, and now suddenly you're stuck because you're trying to figure out, okay, am I sure the market's going to go in that direction? And it's one of those things. You don't want to put yourself in that position where you don't know what's happening in that regards. Okay, so there are some questions. When candles build a liquidity wick, can we have an idea as to where it will go? How will that wick rise, drop before it goes with momentum of the trend? Is there a certain zone or area it will test? Yeah, so I mean, once again, these are questions that you will learn by looking at the charts, right? So if we turn around and we look at charts, here, I'll go back to my original example once again. So this is something that I gave to everybody in the chat room, right? So I look at this as my original example. Why did I say that there was a potential that we would have issues here by number 8? Because there's zones. So when you look to the left, when you're looking at a zone, you're looking at somewhere where we have a deep pullback. So in the case here, as an example, we have a deep pullback and then an opposite push, right? So when you look at zones, that's what you're really looking for. Here, as an example, you have a deep pull and then we have an opposite push. Those are zones that I'm looking for. Here, as an example, we had a pull down and then we're pushing. That's the thing. These aren't zones, these are consolidations. This is what I'm looking for. I'm looking to see on the left side where there were touches, because essentially all these pullbacks, so when you go and you look at your charts, and this is the thing, this is understanding what a chart is. Every time you see a pullback, that's where price has been tested and rejected. So once again, what I mean by that is people have taken a price to a certain level and they've said, no, I don't want to be at that level anymore. I want to now free fall everything. So this is where I say to people, and I say, you have to understand what the charts are telling you. So here, as an example, we're at a resistance level. We almost tap that resistance line and then we pull all the way down. So more than likely, as an example, this is a price zone, right? Because we had a pull up and then now we had a drop all the way through. So you can look, this is a price zone and then this is a price zone. Because what did we have? We had a pull up, or sorry, pull down and then pull up, and then we were going all the way up again, right? And you can say here there was a bit of a price zone, we tapped, but not really, and then all of a sudden we just had a huge drop. So a lot of times when you look at your wicks and you look at where we're wicking, there's hints to say that price is getting rejected. Now, once again, the higher the time frame, the bigger the rejection, the more momentum you're going to have. And the reason why is because now we're on a bigger time frame. So your bigger time frames are always going to provide your bias. And that's the biggest key, is looking at your larger time frames. Now, when you go into the 5 minute, as an example, and we say, okay, like, is this wick going to fill? More than likely with momentum. So, as an example, I want to look at this wick and you're like, okay, well, the trend is down and I see this wick. Is this wick going to fill? Because now we're pulling back up. More than likely, we're probably going to fill because it's a shorter time frame. Perfect example happening here, right? So this is live. So we're right now pretty even, like, with the market. Pulled up. Oh shit, we tapped this zone. Are we going to pull that liquidity? More than likely we are because we're on a shorter time frame. When you start moving to a higher time frame, it might not be as it might be more difficult. So keep that in mind. Your momentum will help you fill time frames, but you're also looking at which time frame you're looking to get at that point. You know, longer versus shorter time frames. How do you know that is the candle it's looking to fill? Well, this is just it's subjective. It's, you know, I'm Picasso here. So I look at these charts, and right away I recognize there's a downward trend, right? I see here there's some wicks, some wicks, some wicks, right? So you can say to yourself right now in the 5 minute that this was a price zone and this was a price zone, right? So price came, touched, pulled back up. Now, do we think excuse me, do we think that price is going to go back down again? More than likely, because, you know, when you start to draw out a trend line, you know, now you have a bit of a trend line, so you're tapping this price region, and more than likely we're going to tap that zone again. When do we think it's going to happen? We don't know, but on the shorter time frames, it's more deliberate than it is on the longer time frame. So, you know, if you get into a position where you're, you know, in a spot where you think we're retracing and we're in bad spots, you know, like if you had taken as an example, and I've done it before, let me go back here. I take a sell here, right? Because I'm like, oh, momentum, and then now I'm stuck. Well, take a look around you and say, okay, well, this is probably a price rejection point. So if we don't pass this price rejection point, chances are I'm safe. And when you start to go up, you start to realize we get to that point, but we don't break it. Like we're not up over here, and now suddenly we're back down into where we need to be. And, you know, eventually it pulls all the way back down again. So once again, it's using judgment calls, but it's also looking to the left to give yourself information, because right away, like I said, I'm doing this on the fly. I can see that, you know, there was rejections over here based on those wicks. There was a bit of rejections over here. You know, there's another rejection over here. So, you know, here as an example, I see a rejection here and I see a rejection here. So maybe this one now pulls back up, does a little arch just like this, right? So we had a little arch, had a little arch down and arch, and now maybe we'll have another arch and go down, right? Because I'm looking at what's happened previously and I see patterns. Always look to find your patterns, and when you start to see those, you'll start to recognize, hey, okay, then chances are it's going to continue that way. And that once again comes with experience, but it also comes with, okay, when I go back to my higher time frame, you know, what's happening? And the question earlier was, are we going to fill? Potentially, because look what's happening. We're in this price zone. So here's the daily zone. So this daily zone is strong, right? So if it breaks, we're off to the races. So what did I say last night? If gold, let me go back here, go back to the gold. If I said if gold breaks 1241, right? So I said 1241. If gold breaks 1241, which there was a price zone, price zone, price zone, we're off to the races. And exactly what happened happened. Why? Because this is a daily. We have this huge candle here. We have all these little price zones in here and over here. But once we pass that, there's really nothing in the recent time. So this is the beginning of May, this is towards the middle of May, to stop us from moving that direction. So this was sort of a pivotal point where now if we get to this level, you see there's consolidation. So if we get over here, we may consolidate, drop for a bit, and then continue up. So it's just understanding the relationship of how the charts move and why the charts are, excuse me, doing what they're doing. What is the most interesting time for trading? 6 a.m. till 9:30 Eastern? Yeah, I mean, it's because most of the markets are open. So there's a Google document on that. You know, it talks about when the best times are to trade. What's your attitude towards risk? You know, my attitude towards risk is simple. If you had a basketball that was like 1 foot in diameter, or, you know, maybe, you know, like 6 inches in diameter, and then you had a basketball net that was like 30 feet in diameter, and you stood 5 feet from that basketball net, how much money would you bet on yourself that you can make that shot? I'd probably bet $1 million that I could make that shot, a 6-inch basketball going into a 30-foot net, right? Because perception is it's such a wide target, I should be able to hit it. So now when you look at risk as in trading, you're looking at the same thing. What am I looking at in terms of my tolerance, and what is my overall objective based on what I see and based on drawing my range, right? So if we go live, and I'll go back to what we were doing here. Let me go back in. So we're going back to USD JPY because it's open right now. So if I go back in and we turn around and look, and we're still plummeting, so I don't get a good idea what's happening here. I still don't get a good idea. Now we're in the 4-hour, right? So we're looking here, and I'm saying to myself, okay, we're plummeting pretty hard still, and it's now tapping a little bit of resistance and yada, yada, yada. But what I see is I start looking left. So first things I notice is this. I start to see like wicks, large wicks. I'm looking for large wicks because I'm looking to figure out what's happening. So now I turn around and I say to myself, okay, where is that in relation? So if I was to say that this was a rejection of the wick, okay, so right away when I start to look, and I always try and go into the middle of the wick just because it's probability. Like I know I might not catch all the move, but maybe I'll catch most of it, right? So when I look at that, I can say, okay, there's going to be trouble right around 110.389. So I've got like about 300 pips more than likely, maybe a little bit less. Maybe if I said right over here as an example, so 462. So you're looking at about 130, like 140 pips at this point. Can I get 15, 20, 30, 40, 50 pips out of this move? So I'll drop back in and I can see, okay, I'm looking right now at my 15-minute window, and we have momentum. There was consolidation, so it looks like we're consolidating again. So this would potentially be a good trade because we're getting the consolidation that we want. So it'll pull back, give us a better range for the pips. And then I'm looking to say, okay, if I hit 462, I'm good. But even if I don't hit 462 and I hit, say, I don't know, like probably like 480, 490, that's like 100 pips. I'm okay. Even if I hit 75 pips, I'm okay because I'm planning this out in my head right now. I'm working the math out. I'm saying to myself, okay, do I have enough room to maneuver? Is there enough range? Like that's what I'm looking for at that point. So I mean, when you look at risk, this would be my risk. So I would say, okay, I don't have a big range, so my risk would probably be less. Like I wouldn't be looking to barrel like huge lot sizes at this trade. Maybe I just barrel half my lot size, or maybe 25% of my normal lot size, just to take that trade. Things to keep in mind: it's 5:47 p.m. Eastern, so like the market's slower. I'm in. The spread will be higher. Not all the markets are running. I want to wait till 7 or 8 o'clock for the Asian Open when it gets a little busier. So if I'm taking a trade here, I have to keep all those things into consideration, and that's how it'll affect my risk management in that regard. Can you explain more when you say finding out why? Like you're looking to the left and seeing what could have caused the movement. So I think I did explain a bit of that. And when you can't find out why, where do you go from there? So yeah, so I did explain a bit of that. So I just sort of did that example is, when I bounced around in the 1 hour and the 50 and the 5, I couldn't really find a bottom that I liked. So I had to move to the next frames to give myself a better idea of what's happening near the bottom. And with that being said, I was able to look at the 4 hour and I can look to the left, and then I can start to see where price is being rejected. Because that's what you're looking to do. You're looking to see where there's possible stops in momentum. And how big are those stops going to be? Once again, as you move higher in time frames, your stops are going to probably be a little bit harder, right? So if you're in the daily and you're coming to this price region, there's probably going to be good support level there where you might get a lot of bounces. But if it breaks it, yeah, it's like breaking a levee for for water. It's just going to explode, and you're going to get a lot stronger movement. So you have to be aware of those. And what I would say is, if you were looking and you were trying to take a trade as an example, I would say, okay, you know what? Like I see that this is my level. Take a sell over here. Put a sell stop over here. So when it blasts through, you know that you're going to probably blast into this level over here. You're good. If it doesn't blast and it goes back up, your order doesn't get tapped because you're letting the market come to you instead of you trying to say, okay, I'm going to take I'm going to take a sell here. I'm going to take a sell here. You know, you're letting the market come to you, and that's the patience. But at least you know that when it executes, you executed because you saw this price levels where there was rejection, and we've broken those price levels through rejection. And that's part of you as being a trader, is understanding like where those levels are, but also understanding that, you know, let the trade come to you in that respect. When you're in profit and you're worried about it reversing for whatever reason and you pull out, how do you alleviate that in terms of you want your profits to run? Okay, so this is an interesting question, because, you know, you're saying to yourself, okay, I am happy with my profits, but now I'm worried that we're going to stop. So I'm looking at USD JPY here as an example, right? So we're in the 4-hour chart. We can see the market's moving. We're dropping. We're around 590. So I've said that we want to go to 560 or it's 462. So it's like, how are we going to do that? More than likely, you know, now we're at 570. It bounces back up to 610. It keeps going back down. So you have to make a judgment call. You have to say to yourself, what am I comfortable with? And what am I trying to do in terms of my overall objective? So my overall objective for every day is to make anywhere between, you know, 1 to 10% as an example. I mean, I aim for 5%. If I get 1%, I'm happy, because profit's profit. If I get 10%, it's a banner day. The other day I got 30%, just because of momentum. So hey, you know, you take what you can get. But overall, you know, like I can average about 10% a day or 5% a day. I'm happy, and I'm not risking a lot. If I have a losing day, I'm losing 5% or, you know, 3% or whatever I'm losing. I'm comfortable with that. So when you're looking at things like this, it's sort of like an old analogy when you're playing like a table game like blackjack, or you're playing poker, and it's like, if your goal was to make $500 and you get to 470 or 450, is that extra $50 going to break you? Are you willing to risk $50 to make, or are you willing to risk $450 to make another $50? Like, does that make sense? So sometimes you make a judgment call and you say, hey, you know what, I'm okay, I'm going to pull out if it retraces to this level. So in this case here, if I look at the 4-hour chart, I'm looking at 462, and say I got in at 9:05, right? So I got in right at like the new 4-hour candle, right? So we looked right at 5 p.m. and I said, I'm going to buy this, I'm going to sell this right at 5 p.m. because I don't care about spread. I want to do that, right? So you're in at let's get the actual exact information here. So you're in exactly at 8:39. You ride it down and you're at like 520 now, and you pulled back to 626. Well, if I'm looking for 100 pips, 739 would be my stop at that point, right? So I would say, okay, if we get back up to 739, I'm out. I don't care what happens after that, because I want my 100 pips locked in. So I would have locked in my 100 pips and just let the trade do whatever it needed to do. Now, before that, I would have said, okay, maybe I only want 50, but as we started to move down, we broke what I would consider like a support level here, so I knew we probably had a little bit more of a bounce to go further down, but that's how I would be adjusting that information. I'd be looking and saying, hey, that's what I want to see. If it goes to that level, it does. If it pulls all the way back, I'm okay. Like, I made profit. How do you know it's a pullback and it won't keep going down unless you wait for it to form and possibly emit a more profitable setup? So once again, this is a psychological thing. There is no such thing as a more profitable setup. You can't quantify, like, you can't be more correct. Okay, so look at profits as black and white. Don't add like adjectives to describe profits. Don't say I'm more profitable. Just say I'm profitable. When you start giving yourself a zero, you know, a zero adjective towards profitability and, you know, not being profitable, it's easier on your life, because you know, to that question, you know, how more profitable? Well, shit, I should have taken a sell over here and I would have been way more profitable. Oh, hey, why I should have taken a sell over here? I would have been way more profitable than this sell. No, you're looking and saying I'm profitable overall. It's profit. So don't look at setups and say, well, I missed the most profitable setup. There's no such thing as that. You entered, and were you profitable? Then it was a profitable setup. There is no more most profitable. because in that case, you're calling tops and bottoms. That's essentially what you're doing to get the most profitable setup. Look at it from just profitability. Was this setup profitable over here? Yes, it was. I got in at 839. It's at 636. I'm 200 pips deep. So there you go. I'm profitable. I'm not looking to say, well, I wish I would have got in over here. You're not Houdini. You're not a genie. You don't know the future. You don't know the past. Well, you know the past based on looking. Yeah, but you can't predict that information. You don't know that that would have been great. All you can do is base your information on what you have here and say, this is what I believe is going to be profitable for me based on my analysis, based on my risk management, and based on my trading plan. All right. Is a pullback price zone like not wick filled if more than one candle? Not necessarily. It's your momentum. You want to look to see that, sometimes a wick, it will take 3 or 4 candles to be filled, depending on the length of the wick, depending on momentum, depending on volume. So it's more of, are we in that race to have that momentum push? And if we are, how are we going to do it? And yeah, it may take 4 or 5 candles depending on what time frame you're on. Uh, okay, thank you for brief. Because of gold, my question, can you explain the momentum and the fill of the wick? Yeah, okay. Okay, so I think I've shown enough of the momentums and filling of wicks. So I think we're good there. Could have just sold 5 minutes ago. Yes, you could have. Wick just filled. Yes. That was the daily chart you were saying, the big candle like a week ago. That is correct. If you look at my chart, it was a daily. Even looking at UJ, for example, now based on how much momentum we've already seen on a daily, this could mean that we're moving with conviction past those daily wicks, potentially. Once again, so here's an example. When we look at sort of the overall flow, and I mean, once again, don't take this with the grail, but usually Tuesday, Wednesday, Thursday in the market all tend to move the same direction, right? If you look at your charts, so if we go back and we look at the dailies, you can start to see that we started the move, and I said this in my original discussion on Sunday, is more than likely if we fill this, we're going to probably fill that wick and we're going to drop back down, right? So what ended up happening is we started to fill and we started to pull. We filled this wick. So this is Thursday, Wednesday, Tuesday, Monday, Sunday. So this was the Friday candle, and I said on Sunday, more than likely we're going to fill that candle. And what happened? We did. So now Monday comes, we pull back, which is fine because we haven't broken that previous high. So this is consolidation. Tuesday rolls around and now we pull down. So now Tuesday comes in and Wednesday comes in, and we know now we're going to fill this wick over here more than likely because now the momentum has started. So we're looking at the ICT, you're looking at the closes for London. So Tuesday close, you'll say, okay, we're in a bullish or a bearish momentum. More than likely the bearish momentum is going to continue. And that's what happened, and that's why you had today's candle, the Wednesday candle, the way it moved. It's completed, and you're okay. So that's why I tell a lot of people, when you start to look at the charts, look at Tuesday, Wednesday, Thursday, because that's the meat and potatoes of the market, right? Sunday, Monday, things are getting set up. Friday's a little wonky. Tuesday, Wednesday, if you can get profitable setups, you can trade twice a week and you can be profitable. Now, once again, mentally, is that stable for you? Like, can you dissect and say, hey, that's what I want to do every day. I want to trade twice a week and be profitable and make 15, 20%. Yeah, on a $500 account, it sucks. But if you're working full time and you have a job and this is a means to an ends, you can then turn around and say, hey, if I just keep doing Tuesday, Wednesday, twice a week, and I can get 5 or 10% each Tuesday, Wednesday with minimal risk and understanding what I'm doing, my means to an ends is, basically done at that point. And you can say to yourself, hey, I'm happy with just beating 90% of the people. And this is the thing. Write this on your trading desk. Write this on your laptop, 90% of traders fail. Do you want to be in the 90% or do you want to be in the 10%? So if you're making 2% a day, 3% a day, you are beating 90% of the traders out there. And that's what you have to keep in mind. This is a marathon. This isn't a sprint. A lot of you guys are in your 20s. Some of you guys are 19, 20, late 20s, early 30s, and you guys are thinking that you need to make $1 million this year. You don't. I worked like a dog in my teens, in my 20s, in my 30s. I killed myself. I was working corporate, like getting beat over the head by a boss that had no clue how they put their pants on in the morning. And it sucked. But you know what? I was like, I have to make a change. I have to do this, but I'm not going to jeopardize my career that I currently had to then screw myself over because I'm trying to learn how to trade. I said, hey, if it works out, it works out. If it doesn't, it doesn't. So you have to manage that, and you have to say, hey, this is what I want to do. And if I want to do this, I have to be constructive, not destructive to myself. Okay, next question. I see support, resistance levels, wicks, trend lines. I always confident in my analysis, but I feel miss one thing for entries. What can that be? I don't think you're missing entries. I just think that you're not holding your trades long enough. I mean, sometimes you're going to get in a poor retracement, but I mean, once again, if you're in the momentum and you're looking at the higher time frame, you have that bias, you have to adjust your stop losses and you have to adjust your take profits. I did go through this in a document and also in the previous webinar. So if you pull those up in the refreshers, we talk about a lot of times where you're putting your stop losses, where you're putting your take profits, just so that you're comfortable with that. And I mean, here, a perfect example, right? So if we're looking at, we'll go right here live. Okay, so let's go live. You guys can all look at these trades and say, hey, this is what I'm going to do. I'm going to just copy what Ted said. Okay, so we have consolidation, right? So I like looking at the 15-minute. The 15-minute is sort of like the middle of the range. I mean, I can see what's happening. I can see everything that's going on. I can see right away we have a little bit of consolidation. And what I mean by that is, their price is working hard to get past this little level here, but it's not doing it. You can see over here, price tried over here, didn't get to that level, so we're forming a little box, right? You can say here there's a little bit of a box. We can say over here there was a bit of a box. There's a little bit of a box. So now when I look at something like this and I say to myself, okay, what am I looking to do overall? I look at the time that I'm trading, which is 6 o'clock right now, so we know a new hour is forming, so orders are getting pushed in, so hence the push up, right? But how much am I willing to take a push up? Maybe it's going to go to this level here, right? So if I think that I want to have a wider stop, I would then say, okay, I'm going to put my stop loss here and say to myself at that point, you have, I think it's about 200 pips or so. So if I say, okay, my stop loss, about 400 pips, I have to adjust my take profit and my stop loss then for a 1-to-1 ratio. So if I'm doing 400 pips there, I'm doing 300 pips here. So my 300 pip range would be probably right over here at 1175, right? So I would say, okay, we're going to go to 11,175, and then we're going to go drop down 400 pips. So we got a 1-to-1, but I have to adjust my lot size. I can't have a huge lot size if I'm going to have such a wide stop loss and a wide take profit. So that's where you have to manage those trades. But if I'm looking, I would say, okay, this is not going to make sense. So what am I going to do instead? I'm going to take a pending stop, sell stop over here, right? So as an example, so let me do this properly. As an example, I see that we have a little bit of a support in the 15. So I'll take a sell stop here. Why? Because you can see when we had support levels, what happened? They were broken, right? Everything was broken. There was always support levels that were broken, and if I took a sell stop over in this area here, I would continue to drop. I took a sell stop over here, I continued to drop. So why am I not following the pattern? Why am I not playing that game of if I break this over here, I'm taking a sell stop right here and riding it down? Like, why aren't we doing that? Why are we trying to time the market? And if you do that and you put yourself in a position where I think the market's going to go that direction eventually, you're going to be much better off at that time. All right. A trend reversal versus a pullback. I get confused. Trend reversal is probably going to be on a higher time frame, a pullback is on a shorter time frame. Why is there such a huge gap between April 22nd and April 25th? Because it's the weekend? Let me just double check. April, yeah, that was a weekend, right? So here, the 4th, this was your 21st, and this was the 24th. So this is just a weekend. There was just a weekend move. There was a gap, and it was also, I think, there was elections potentially. I think there was something happened on that day. But yeah, no, I think there was a European stuff going on. No, was it that day? I don't remember. But yeah, it's just a weekend. There was just a gap. Okay. Since your ratio is 1-to-1 and you aim for 10 pips, do you ever hold a drawdown more than 10 pips if it's not past your support or resistance? Yeah, I've done it. I'm not proud of it, but yeah, I have. It's just it's all based on subjective. I think that the market is just trying to get a better price, and I've entered too early. I'll hold it. My absolute stop is usually 30 pips. Anytime I've gone past 30 pips and I've looked at my trading journal, I've lost a shit ton. So I know that 30 pips, even 20 pips, is probably I've entered in a bad trade and I've entered bad analysis. I never go past that just because it's just not profitable at that point. And that's just based on my own trading journal, based on my own stats. I crunch all those numbers to give myself the best profitability. When you do sell limits, is there a pip amount in general that you set it past, like kind of setting stop loss 20, 30 pips past, or would you set it past the buy limit? Yeah, you would want to go a little bit past the rejection point. So yeah, go 50 pips deep, maybe 40 pips deep, just to give yourself an idea that the momentum's actually moving in that direction and it's not just a fake out at that point. What does it mean to call tops and bottoms? It means that you're trying to take a buy position at the very, very bottom. So you're trying to say, I believe now we're at the end of the trend and the trend is changing. Trend is changing. So you're trying to take a sell here and a buy here, where more than likely most traders will take buys here and sells over here because you're in mid-trend. You don't want to call tops and bottoms. You want to be comfortable with that. Any advice on how to restrain emotional reactions that hurt your trading because you get into higher lot size? I can feel myself trading safer with higher lot sizes, and it's been cutting into my profits. Well, nobody says you have to move up lot sizes. You can just trade more smaller lots and just open more positions. I don't know what the whole big thing is for people to trade bigger lot sizes. I traded 10 lots for 6 months because I thought that I was happy with that. It was only this year that I moved up to higher lot sizes because I wanted to test myself. But I mean, sometimes I just do a 25 lot, or a 15 lot, or maybe sometimes I'll do a 100 lot. Like it's just varying. I mean, you don't have to do something just because everybody else is doing it. And I think if you can get out of that mindset of being a sheep and just being yourself, you'll probably be a lot better trader. Okay, I think I answered that question. Okay, wanting to run my account up is killing me because I run it up, will get crushed. Not sure how I can deal with that. Also wanting huge swings and holding them, re-entering later because I'm rolling on a pack and giving profits back. Okay, so this is a common occurrence with a lot of people. It's a habit thing. Okay, so when you go to the gym and you're going to the gym for the first 2 weeks when you sign up for your gym membership, you're probably at the gym every day, right? Because you're seeing progress, you're excited, it's something new. Come talk to me in 4 months from now, and you're probably not going you're not going to the gym every day anymore because you're not as motivated. So it's a human element. And so how do you stay motivated and how do you stay on track? And it's the reason why we have the trading groups. Is the trading groups, you have a support system there. You can ask questions, you can work with people. You're not going to get involved in the hype with everybody else. but you're sticking to your plan, and you really need to focus and dial in and say, hey, listen, if I do 3% today and 5% tomorrow, and my goal overall for the week is 10%, and I've done 8% already, I have to quit. And I know it sucks, but it's sort of like quitting cold turkey when you're smoking. Just because you're hanging out with smoker doesn't mean you have to start smoking again. Like, are basically your willpower is shot if you can't decide that, hey, this is what's working for me and this is not what's working for me. Dialing in your plan and really setting yourself up for success. That is your key. You have to follow your plan. It has to, like, if you have to, electrocute yourself with your laptop or your desktop when you're trading. Like, if you need to stop, put yourself in the hospital for a week so that you don't trade anymore. Break your keyboard. Go buy a new one for 10 bucks. Every time you don't want to trade anymore, throw your keyboard out. Do whatever you can do. I can give you a perfect example. So I was playing online poker on Ultimate Bet back in 2005. No, it was 2008. Yeah, it was just after the poker boom. I ran my account up from $500 up to 12,000 in one day. I was so trigger happy to go back and play poker, and I had my desktop. I was in my room and I was playing. I ran it up, and I still have the screenshots, which is funny. I literally threw my keyboard out the window because I couldn't control myself, and I knew I was going to go back in, and I had just deposited the $500 on my credit card to play online poker, and they don't let you withdraw money for like 24 to 48 hours. That was the longest 48 hours of my life because I had $10,000 sitting there, and back in my 20s, you're in university or whatever, that was a huge sum of money, and I had to literally sit there and wait 48 hours, and it was the longest 48 hours of my life to press the withdrawal button. But I tossed my keyboard out the window, my second story of my house. I tossed my keyboard out the window, let it fall in the driveway, and I ran it over with my car. Because then I knew that if I wanted to play poker, I would literally have to drive over to Future Shop or Best Buy at the time to go pick up a new keyboard to play again. So if that's extreme what you have to do, maybe that's something that you have to do. It's just, at the end of the day, you have to figure out what works for you, but you have to stick with it. Do you have any tips to be able to take entries with tighter stops? Well, just work on smaller time frames. The smaller time frames will give you entries. So if we look at the 5-minute or even the 1-minute, you can see here, you right away I can look very closely and I can say, okay, this is probably a resistance level, so maybe it's time to take a sell position and then start riding it back down into this channel, because right away we can see a pattern. So we drop back down, push back up, drop back down, push back up, so more than likely we're going to go back down. We have support level there, somewhat of a support level there, or sorry, resistance levels, and that's what I see. So if you dial into the shorter time frames and you look at that and you keep your bias with the higher time frames, chances are that's what we're going to see. But it's also timing and making sure you're in a market where there's high volume. You see the same thing over and over again, and this is where you have to do your back testing. I didn't have a simulator when I back tested. I would literally turn around and do this. Okay, I want to look at, let's see, I'm going to trade 7 a.m. So here's 7 a.m. at May 17th over here. So 1-minute charts. Okay, so I would turn around, and this is what I would do every night when I was, working away at trading, and I would look and I would say, okay, what's happening over here? Okay, we're going down, going back up, going down. Okay, all right, so I see, what do I see? A little bit of support level here, right? It's a little bit of support, a little bit of support. Okay, potentially, that's going to happen. Okay, I don't have enough information yet. Okay, I'm going to watch candles. Okay, now we're going up. But I see that there's probably a resistance level over here. So what am I looking for? Okay, so when I get up over here, maybe we're going to start dropping again on the 1-minute, right? So it's things like that. You're just testing to see what is happening in the market, and that's going to give you your information, right? We know that this is a super low, so are we coming back there again? As soon as we don't tap it, we can see that we have a little bit of a trend line. Once we break that trend over here, then we know we're going in this direction here. Once again, it's 1 minute time frame, a little tighter, but it'll help you with developing your entries at that point. But that's what I would do when I would back test information, is I would look and say, hey, what makes sense for me at this point? And you can see here, we're pushing back up. So you know what? Maybe now we're reversing again. But who knows? We don't know until we get a better idea of what's happening. People are putting orders in. We're not at the Asian session yet. Maybe we're going to go further down. So we don't know. Do you believe in gap trading? Nope, I don't understand gap trading. So pretty much what I've been trying to understand is that in order to see upcoming reversals, say look left where there is a lot of traffic, and being on the higher time frames, a little retracements on the smaller time frames. Correct. Can you please explain the orders being stacked at the end of the hour? I missed that part. It is in the drive, but I mean essentially at the end of the hour, more than likely people are just leaving. It's just the market works in specific cycles. That's why we have time frames, right? So start to figure this stuff out. When you start to actually look and say to yourself, hey, what's happening? Like, why does the market have, like, why do all, brokers work on these time frames? So there has to be some relevance to each of these frames, right? So that's when you start to look and you start to say, hey, what's happening? And we can do a perfect example right now. So if we go into the 15-minute frame, it's 6:16. We had a pullback, and now once again we had a push up. So the 6 p.m. candle pushed up, 172 pips, right? So when you start to look at stuff like that, you could start to say to yourself, hey, if I know this is coming, if I look at the 1 minute chart and I turn around and I say, okay, I'm going to go into right here, if I go into this, I could see that we've already started an upward trend. Potentially at the 6 p.m. candle, we're going to have this push up, and surprise, surprise, it continues with the 1 hour, with the 1 minute candles, and it pushes up. We're aware that this could possibly be a resistance level. Once we break that level, we're okay. But when we start to see these candles move, we could say to ourselves, hey, if I think that I could take a buy position at this point here, I know my resistance levels right over here because of what I've seen here. I could say to myself at that point, okay, at 6 p.m., maybe I take a buy and run it up 50 pips. If I say 50 pips, which is like over here, 70 pips. Once I get to that point, we stop. But if it keeps going up, hey, I've traded off the 1 minute candle and I've made now 100 pips off of that. So it's really, once again, it's dependent on what you're looking for, but these are little hints that as you start to look and you see the new hours start, you'll see those push-ups. So every time you back test and you start to look at things, look at specific times of the charts. That's how you develop a sense of when you should be trading, what pair you should be trading, and why. All right. I'm using a risk of 5% per trade. Is that appropriate? I don't know, is it? I mean, what are you comfortable with? That's what you have to determine on your own. Some people use 5%, some people use 10, some people use 1. It's really how you're trading according to your plan. How do I ensure I'm not over trading and stay within my means, even when I'm experiencing a lot of losses and seeing an opportunity to make it back? Self-control. Give yourself equity for the day. If you blow 5% equity, you're done for the day. It doesn't matter if you would have made 100% back the next day. So what that teaches you, it teaches you two things. It teaches you, hey, maybe I should get a little bit better at trading, and B, maybe I shouldn't blow my whole 5% on the first 5 minutes of my trading, and maybe I should wait for better positions. And it teaches you discipline. And if you feel that you would have made all that money back if you demo trading, maybe you have to go back to demo a bit more and work on that point so that you become a more confident trader, so you're not making those mistakes right off the bat. All right. Okay, I've noticed that the last couple weeks there has been sections of time where the 15-minute candles, even up to 2 hours of time, where UJ, USD JPY, and Aussie US dollar go the same direction. Long term, they should be going the different way. Example, last week, many of the group are buying USD JPY for 20 plus pips, and at the same time, I was going to buy at Australian, grab 12 pips and out. Been trying to figure out but can't piece it together. Um, you know, it's understanding that potentially at that point the Australian dollar was stronger than the US dollar, but the US dollar was stronger than the Japanese yen. So there might have been a correlation mix-up. That's probably the best case of why that happened. You're basically saying to yourself, hey, um, at this point in time, there's a bit of an issue with the markets in terms of the currency strengths and the relations, and that's the reason why both of them technically could be going up at the same time at that point. Okay. What's the biggest hurdle you overcame as a trader? Just understanding the markets. What stop loss do you use when filling in the wick? Once again, this is according to your plan. I don't know what your plan is, so I can't tell you what your stop loss should be. Should my stop loss always be fixed? If I trade one pair, I should let it change due to the market conditions. It should always be the same. Hey Ted, how many candle confirmations should we look for in a supply or demand zone? Couldn't tell you. There's no right answer to that. It's all dependent on the time frame you're looking at. It's, longer time frames, maybe you might take longer and you might only hit a zone twice. Shorter time frames, you might hit it 3 or 4 times. Once again, perfect example. If we look live here, um, you can see here there was a zone that was hit multiple times before we actually had a pull up. Here, we had a zone. We had a zone here. It pulled back down, and then we basically pulled right back up afterwards, right? So you can start to see where things are happening. But once again, this is in the minute chart. So when we go into the 15-minute chart, now we'll start to see things happening, and you can start to see, okay, we tapped the zone, which we said that there would be an issue around here, right? So we looked over and we looked left, and you could see right away that there was an issue, right? Um, right here, right over here, but more likely probably this area over here, right? So when we go across, we didn't exactly tap it, so maybe we're looking to get a wick fill later on. But this is not enough information for me to say, okay, now it's a buy. This is one candle. This is like 2 hours into the trading day. Like, we don't know what's happening. This is where people get caught, because right away everyone's like, oh, now it's a buy. Okay, trend is reversing, blah, blah, blah. We don't know that. We don't have enough information. What I can deduce from some of this is, when you look at this, you can say to yourself, hey, potentially what's happened is there was so much momentum going down. Now we're going back up. You can see here we tapped on the daily. This is probably a better example. We tapped on the daily, this price region, right? So there's a big price region. So what did I say? We have to break that region. So what did I tell everybody? You put your buy, your sell stop right there. It wouldn't have been tapped. You had been fine, and now it's going back up, so you're okay. So it's really subjective in terms of zones, but it's understanding, looking left to see where those zones are. All right, more questions. Based on your trading plan, what's the size of your stop loss in pips? 100 to 300 pips. Do you ride your trades from zone to zone? No. I trade according to my plan, which is 100 pips. Once again, like, asking me questions about how I trade will not help you trade, because I developed my trading style based on what worked for me. By me telling you how I trade and by you trying to copy me is not going to be a success for you. It can give you insight onto, maybe what you should be looking for as a trader. But if you're just going to try and mimic me, you're going to fail, because there's a lot of things that I look at that are intuitive to me and that I do not necessarily convey right away, because it's things that I see on the fly. I know, as an example here, you know, right away looking here, okay, well, more than likely, as soon as we got to this candle here on the 5-minute, we weren't going back down, right? We're over here, maybe we're going back down, but I looked and, you know, I could say, okay, maybe we are, but now I would say, okay, how far up are we going? Probably over to this area over here, right? And if we don't, that's fine. But if I see this happening, I would be looking to say, okay, we're going to go up for a bit. I could probably trade this counter trend when we go back down afterwards and ride the other way. But that's just because I understand the dynamics of what's happening at that point. And that comes with experience, that comes with time in front of the charts. What do you think is a reasonable win rate? I don't know. Once again, these are subjective questions. You know, maybe you win 40% of the time, but those 40% wins are more profitable than your losses, right? So it's really dependent on what you feel comfortable with, and it's also, once again, the mental fortitude that you have of, am I able to take 10 losses in a row and my one big gain offset all those losses? So it's one of those things. How do you tell when to look for a reversal versus a trend continuation? Look at the higher time frames. What should you be looking for in terms of win ratio? I would say 60 to 70% should be okay in that respect. I know you said not to ask about your plan, but we trade similar. So what do you think yours is? My win ratio this week has been, let me just check. I think I lost one trade this week so far. Yeah, so corporate wise, I didn't lose a trade yet, corporate, which is good. So this week I did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades, and I lost one trade. And that was just because I was stupid. Okay, so there's more questions here. You said one candle wasn't good enough for a trend change based off of support and resistance. What's a good amount of candles that dictates the trend change? I would say the longer time frame, so 1 or 2 daily candles would probably give you a better trend change. Can you tell us more about the wicks don't lie? Like, how can we identify clues on them? Well, you can see here as an example, wicks don't lie, right? So this is your bottom wick. Your next wick finishes a little higher, then a little higher, then a little higher. So you see, as long as these wicks are finishing higher, the trend continues. So there's your wicks don't lie. That's pretty much as straightforward as I can get it. Can you demonstrate the thinking process on a trade? I think I've done that enough. And what types of clues should we be looking for the zones in a trend continuation or reversal? As I stated, your higher trends will give you the overall bias, and as you start to dig deeper, you'll start to see smaller trends start to show up. Yes, USD JPY will have a flash crash in the next 5 minutes. Javier must be trading somewhere. But you can see here as an example, you know, we have a pull up, but this is not necessarily anything that it's confirmation of a trend reversal. It's more of a tap into a price zone, and maybe we fill it, maybe we don't, but I don't have enough information to say what will happen. The last bad trades affected your confidence. What did you do? I took a break. Whenever I have a bad week of trading, so one week I lost 100K, I spent the whole weekend reviewing my trades and mentally preparing myself for the following week. And that Sunday I cleared 800,000, and then the next day I cleared 600,000. Your bad trades are, if you know what you did wrong, that is more important than the bad trade itself. Do you recommend that we trade the direction of the higher time frame or trade the direction on the execution time frame? Once again, what are you looking for in terms of your plan? Trade according to your trading plan. It's so imperative to build out your plan to execute what you want to do. The trend is your friend. It's simple things like that. You keep trading simple. Don't try and do fancy things or try and reinvent stuff. Do more back testing and do more demo trading to understand the market momentum, to understand why the market does what it does before you start trying to enter live trades or even trade in general. There were times where I would be looking at charts for 6 or 7 hours, just staring at them to say, okay, what do I think is going to happen? You know, it's the reason why I could say, hey, this is probably going to continue down to over here because I've seen it happen before. This is probably going to go and fill now. Like you start to recognize things because you start to look and you say, hey, you know, at this time right now, it's 6:30, right? I know Asian opens at 8 p.m. So why is this happening right now? Orders are being placed for 8 p.m. drop. Okay, so it's things like that. It's like understanding what's happening, and like I said, if you want to get in the drop, put a pending order, sell order right here, and get in, and it'll either hit or it won't. But you're not guessing with this candle what it's doing because eventually, if it comes down that way, you know you have the momentum. If it's going back up, your trade doesn't get executed, and then you can just cancel it, just exit out, and you're done. It's so simple. There's so many different ways to attack the markets, but you have to apply yourself and you have to do the work. You have to put in the hours. You have to sit in front of the charts for 10, 12 hours. You know, spend a whole Saturday just in front of the charts. Turn off social media, turn off everything, go into a room and lock yourself in and just study. Look at the charts, just look, see what's happening. So, you know, like I used to just sit and just look. Why is this happening? Whoa, look at that. Okay, that went all the way down. You know, I would stare at, look, what's happening? Zoom out even further. Go into another time frame and just play with the charts and figure out, hey, what the hell happened over here? What was this? This was on, you know, January 3rd at, it seems like almost 10 a.m., right? What happened here? Was there a news event? What was the news event? What was the outcome of that news event? And then why did we push all the way back down? You know, these are things that you have to do as a trader and you have to look at and you have to ask why? Why did this happen? We don't know. Go back and look. This is going to help you and develop yourself as a trader and give you that confidence because I can't teach you everything I have in my brain. I can only tell you how I got the stuff in my brain. And you have to go there and get that stuff in your brain and figure out how it makes sense for you. It's so very important when you start to look at things and you start to examine stuff. You know, like we go back to the 5-minute chart. See, look, now we're on a downward trend. So, you know, if you had put your stop over here, you've still been okay. It's those things. When you look at 633, so we know that chances are we're going to 7. We're going to probably pull all the way down to finish off the hour, right? Because when we go into the hour time frames, you can see here we have a wick that we want to fill. There's momentum. We have a wick here that's starting. So more than likely we're going to start to pull further down. These are things that I've seen over and over and over again, so I know to take advantage of those if I want to and it's part of my plan. But if it's not part of my plan, I just stare at it. Like I don't care what's happening now. I'm not trading now. I'm going to be eating dinner soon. So this to me doesn't matter. I don't care about this. But what I care about is, was I right with my analysis, so that if I have to go back to it next time and I have to examine something, I will go through and do that. I think the confusing is everyone trend is your friend, but everyone uses different time frames for what is best for you. Yeah, so you work on the time frame that you think is the best. I've always used the 4-hour because it's given me pretty much a ballpark picture of what's going on overall, but it's not long enough that I have to make any decisions longer than the day, right? So the 4-hour trend is going down. So would you recommend to trade at session opens? Sure, if you want to trade at session opens, you can. I mean, once again, it's up to you in terms of how you want to build your plan out. What makes sense for you? Like where is the movement happening that is best suited for when you're going to trade? I know that I'm up between 6:30 and 9:30 in the morning. That's the best time for me to trade. I build my trading plan according to that. I watch those specific times. How can you tell the momentum has died out? You can't. These, once again, these are so subjective. How do you know it's going to rain tomorrow? We look at the clouds. Maybe it's overcast for the whole day and the clouds, it doesn't rain. Maybe there's one cloud in the sky and it rains. These are subjective questions that you have to examine as a trader. Like you can see here right away, now we have indecision. Price is now starting to fall in the 1 hour candle. Like these are things that you have to watch and you have to say, okay, why is that happening? Go and look in your charts right now live and ask yourself, why is this happening? You're going to look to the left. You're going to say, okay, what do I see over here? You know, like what am I looking for in terms of what's happening in the market? You know, I can see here there was a little bit of a level here, and now I'm over here again. So I'm coming to a support level, and it's starting to drop a bit. So it's really, once again, time in front of the charts and the experience to get that, and really trade demo. Work on just looking at the charts, drawing support and resistance, and watching candle movements to get comfortable with that. All right. I think those were all the questions. I don't see any more. Um, so hopefully this, there's a couple more, yeah. What is my opinion on fibs? I don't have opinions on indicators, sorry. I don't want to answer questions related to those things, like my opinion on stuff. You guys should be, this is the thing, I give you a webinar, I want you guys to ask me specific questions related to your trading plan. Come to me with specific questions. Don't ask me subjective questions. Say, Ted, today I took a trade at 9:55, it went back like 30 pips and then it went the wrong direction. What did I do wrong? These are the kind of questions you should be asking me, because this will give you the most beneficial information because it's related directly to your trading. You guys are asking me what I do. Who cares what I do? I can tell you what I do every single day. You're not going to do what I do, because you know what? I guarantee you at 8 a.m. in the morning, 90% of you were still looking at the charts. I was already done for the day. I was eating breakfast. I was watching TV. You guys were still trading. So you can't do what I do, because I was up at 6:45. I was on the charts at 6:50. I was entering my positions and I was done by 8 o'clock. How many people were done by 8 a.m. this morning trading? Was anybody done? No. I can guarantee you nobody was done at 8 a.m. trading today. Okay. All right. So people are asking questions. All right. So it's good to look at least some. All right. So yeah, there's like 100 of you in the chat room and one of me. So now you guys all decided to attack. Good. It's about time you started waking up and using me as to your advantage. So question. So it's a good to look at least some hours or so before the open would react and then trade according to after the open. Yes, more than likely you'll see positions being taken before the open and then you'll see a movement. I took a trade today and hit my stop loss before the drop. What am I doing wrong? I don't know when you took that trade, so you have to give more information. I took a trade today on AUD USD. All right, so let's take a look at AUD USD. All right, let's look at AUD USD. All right, at 1940 GMT. All right. All right, let's take a look here. 1930, 1940. Um, all right, so you took a sell at 1940 at price level 74,188. What did you do wrong? I don't even know if you can get to that. 1940 at 74. 74, 188. I don't even see 74 to 188. 1940. There's like, this is 1940, am I right? I wouldn't even be looking at cells. I mean, I'm looking at all these time frames here. Uh, there's nothing really to show that there was a cell. Um, let's look. Let's go. Like you can see right away here, like I mean, I can just do this pretty straightforward and be like, don't, like there's no cells anywhere today at all with AUD. Um, it's just been a straight upward battle, and there was it doesn't look like um, based on the 4 hour chart. Nope, there's still not a cell. You can see right away, even on the 4 hour chart, we bottomed out. You had pulls all the way up, and then we just tapped. Um, all right, let's see if I can find it here. Yeah, there's no cells. Like you can see here clearly, there is no cells. Like this, pretty much no cells. You had just the last hours of momentum, and it's all the way up still. There's no cells here. I don't see a cell anywhere here just because I see the trend moving up. This is probably just off trend, but for the most part, we were pulling up. So this would have been the 5 p.m. candle, the 1 p.m. candle, the 9 a.m. candle, the 5 a.m. candle, and this was sort of the London candle. But I mean, even that all day, it's just been pushing all the way up. So I don't think there would have been a sell at that point. I think you just got caught in a trend, and basically you got caught on the downside of an overall trend, which was up. Yeah, okay. Okay, so yeah, we're talking about this candle right now. So this is, but your overall trend is still up. This one candle does not dictate a reversal. Like this is what I want you guys to understand. There's no reversal here. Even here, you would have saw an upwards push right away at the next candle, and then you saw the rest of the push up here. There is no trend. Like I mean, once again, here we can draw this out really quickly. So here's your resistance. Uh, um, and you can say, for example, there's your support. We're still not breaking. We still haven't broken anything. You can see where all the price zones are. We're just tapping price zones. Like we tap price zone here, tap the price zone there, tap the price zone there. But you can see that even if we turn around and you just use like simple support and resistance lines, you could say, okay, that's it. Like there's no break. There's no break here. It was this channeling. Like you can see clearly here on this, there was just a channel, went up, down, up, and then you can see where it came from. It came down, pushed all the way up, and then bounced, and then probably go again against that. But it's just more of where you're checking your overall trades and what's happening in that regards. All right. No, I'm looking at GMT time because my broker's GMT time. These are all GMT. Can you explain supply and demand zone where I draw? Okay. All right, let's go back to the candle. So let me erase this. This is not a good chart. Let's go. All right. Supply and demand zones, once again, are where price is rejected. So you can see clearly you look for a rejection in price. So rejection in price, this is a zone. Okay, because price dropped all the way down. This is a zone because price went back up. Wherever there's rejection, that's probably not a good one. That is where you're going to find your zones. Wherever there's rejection and push down, that is a zone. So this area over here, zone. So you're looking to see where the wicks are. Wherever there's a wick, there's a rejection, and that's where we're going. So perfect example here, we had rejection and then down. Okay, so that is a supply and demand zone. Once again, you have to be subjective and you have to figure out what makes sense for you. Yes, this will be in the vault. This will be recorded. All right. Not explaining what a pip is, not explaining what support and resistance is or a trend line. Okay, so let's wrap this up. I entered pound J or okay, let's see this question here. A lot of these questions you guys should be looking in the vault for answers. This is not beneficial to everybody answering these questions, but I will. Not this one particular. I entered the pound Japanese yen short today at the fall, but each time I entered it, the momentum it retraced and pull small back. I didn't lose the trades, but I was quite disappointed to make the same mistake. Do you have any advice on how to get better entries? Look at the smaller time frames. That will give you better entries. How do you know if a retracement is taking place or the overall trend has changed? Look at the higher time frames. What's my net worth and what's Rags' net worth? Probably a lot. Okay, so hopefully that helps everybody. So I will put this in the drive, but I mean, once again, I try and do these a little bit more frequent, but I mean, I think you guys have to come with a little bit more questions in terms of what's happening and understanding it that way to give yourselves more direct questions. I think that's what we have to do is work on better questioning, not these subjective questions, but come with examples and say why you did what you did and how you did it. And I think that'll help everybody. So with that being said, you guys have a good day. I will put this in the vault as soon as it's rendered, but thank you for participating, and I think we had a good discussion. So enjoy your evening or your mornings, and I'll have this in the vault as soon as possible.